Adrian Foster is Asian head of financial markets at Rabobank. He joins me now from Hong Kong. Adrian, good to see you. I just want to read these comments from Alan Greenspan because they really are quite stunning. He says, the chances of Greece defaulting are so high that you almost have to say that there's no way out. And then he adds that that may leave some U.S. banks up against a wall. Is he right about the probability of Greece defaulting here?
I certainly find it hard to argue forcefully against him. If you look at the debt levels that we've got there, very much on the sovereign balance sheet as well, so not contingent liabilities, which we do see in some of the other countries. This is a deficit which needs to be funded. But I think if you just stand back a little bit, I think what the game has been for Europe for the last few months now, not so much a will they or won't they default, but when will they default? And I think that's a very important question, because if you think about Greece needs continued funding. I think 117 billion of debt to be rolled over in the next 3 years, 33 billion euro, of new funding required to fund that budget deficit. Whilst they are taking austerity measures, they still have a deficit. And of course, there's the contagion effect to the banking system of the broader European economy. And I think these are very much the issues that the European policymakers are thinking about. And I guess you could describe it as a train wreck in Greece, but I think the policymakers are very much focused on keeping it as a slow motion train wreck, extending the period out. And I think by 2013, a Greek default is much less of a systemic challenge for Europe than it is currently. So I think there's a very important time dimension to it.
And Adrian, is the logic there that if we buy some time for Greece and allow it to default perhaps further down the track, that in the meantime, the economic recovery will gather some more pace and will be in a better position to then deal with those losses? Is that what you're saying?
Yeah, that's true of Greece, although I don't hold out a lot of hope for a sharp recovery in Greece, but certainly at the margin that'd be true. But I think very, very true for Europe overall. And in particular, the banking system, having just been through some pretty tough times in the last couple of years, will take a couple of years just to get well and truly back on its feet. And I think a couple of years down the road, in a much stronger position to withstand to withstand the implications of a Greek default.
Adrian, lastly, what do you do in these markets with all this volatility, all this uncertainty? Is the trend still upwards, or is there a big risk here getting involved in anything risky?
Well, I think that there is certainly risks, and I think it's very hard to have high commitment in trading at the moment. I look at it from the perspective of the region. We've clearly seen some market weakness around the Asia region, and I think investors are one part reality check, two part fear is the dominant forces at the moment. Reality check because we had a couple of strong prints on the US economy only a few months ago. People thought maybe this 4% recovery in the US was coming through. It's clearly not, and I think the US economy is more a 1.5% to 2% GDP growth. 2-point fear, of course, is the end of QE2. My guess is that that'll actually pass relatively uneventfully. And the last point of fear is just what is going on in the European periphery. And as we're mesmerised by these challenges facing Greece, I think it's very hard to be confident until we get some clearer path on that.